Friends, today's podcast is on the topic correcting mistakes. Mistakes happen in every bull market, in every portfolio, for almost every investor. Very few investors are able to completely steer clear of mistakes. If you are an enterprising investor, somebody who tries to do more, probably the share of mistakes in your portfolio will be more than for somebody who is risk averse. Even if you are the kind who just thought that you are not the risk taking type, you would restrict yourself to mutual funds, even your portfolio will be prone to mistakes. It's simply the nature of a bull market that our decision making tends to lose its quality. And that loss of quality reflects in our choices. What are these mistakes that I'm talking about? It could be a mistake of choice. It could be a mistake in the valuation at which you exercise the choice. Or it could be a mistake in the allocation to that particular choice. Sometimes it could be a deadly combination of all three. As an investor, it is our responsibility to go back to our portfolios at the end of every bull market and look at what are these mistakes that we may have committed. We need to look at it afresh as if we are starting all over again and it is somebody else's portfolio that has come to us for a fixed job. Then you will see things very differently. If the choices are basically wrong or flawed, then it's a simple call to action. You need to walk out of these wrong choices. If the allocation to a choice is excessive or inadequate, then you need to correct that mistake. If you have bought too much of something, you need to possibly walk out of it to the extent that you are uncomfortable. Or if you have bought too little, then when the markets fall, you take a call of conviction and put in more money to scale up your investment. It is important to understand mistakes. It is important to understand what it takes to convert a mistake into a positive investment. You cannot allow mistakes to stay. Let me share a simple secret. At the end of every bull market, when I took a fresh look at portfolios, it usually happened at a time when the markets had fallen, everybody was beaten down, and all of us were wondering how we could come out of that situation. Sometimes we even had cash, and you are still looking at how one could deploy money and rise above the mood of the market. Essentially, you need to take decisions, and these decisions should be based on a proper investment logic. They must be based on a fresh look, and they must be based on very high conviction. Most of us fail to recognize it is at the peak of our bull market that our conviction is actually at its weakest. We may believe too much in something, but it may not be the best thing to place our belief. Whereas once the markets fall, that situation does not continue to be existing. So in a new situation, you need to again revisit your beliefs and then see where your conviction is highest and make sure our money is allocated to that highest part. Correcting mistakes is an intrinsic part of every investor's investing. It is evolutionary and each of us needs to move on in life. Thank you.